Everybody, it is Thursday evening, May 13th, 2010. We're going to take a quick look at the S&P 500. If you're interested in looking at the other markets on a daily basis and stock ideas, go to alphatrends.net. But S&P 500, we can see, is having some trouble with this 50-day moving average. As I pointed out earlier on Twitter, this was where the market was 50 days ago. So you can see that days 49, 48, 47, 46, etc. Those are the days we're going to be replacing and calculating for the S&P 500's 50-day moving average, meaning that even if this market just turns sideways here, that the 50-day moving average will continue to rise. Even when we saw last Thursday, we can see, well, let's just take a look here. Last Thursday and Friday, we had seen the S&P 500 obviously get hit real hard. Look at the value of the S&P's 50-day moving average. On Wednesday, it was 117.18, and when the market got smashed, the moving average continued to rise up to 22 cents, and the next day up to $17.24. So it continues to rise. It's a lagging indicator, and just don't put so much emphasis on that 50-day moving average. What seems to be more important to me are two other things. First, if you look at this week, obviously we've got a positive week. We had the market gap up big on Monday. The average price since Monday, though, this is the 4-day volume weighted average price, so it takes into consideration all of the trades on the SPY from Monday through Thursday. The market fell below that this afternoon, meaning that the average purchaser at this week is losing money. So what we want to look at next is, since the event, that is since last Thursday when we had that meltdown, what's the average price been since then? Well, the average price since last Thursday was $114.50, right around in that area. And again, it's a moving number, so it'll change tomorrow. So we have a couple levels below us that are looking important. First of all, the lows for the week right around 115. We have also the 114.53 level. So I think a lot of people are thinking that if it breaks down, it's going to close this gap. Now, to close that gap and get it down to 111, that's a pretty major sell-off, and doesn't mean it's not unprecedented. Obviously, we know it can happen, but I think that we're in for more probably sideways consolidation, and maybe between this type of range, between 114 to 118 for now. It's still a very volatile, dangerous environment. Intraday, there are good opportunities. This afternoon, we had seen a real nice sell-off after the midday lows were taken out, and that was certainly very tradable. And this is what I was using as a price objective, actually. But anyways, that's a look at the S&P 500 for Thursday, May 13th. Thanks.